Good morning, everybody. You are watching a live daily market outlook for Tuesday, 12th of March 2013, prepared by Windsor Brokers. No significant changes in the market seen in the past Asian session as euro returns back to 130 handle following yesterday's rally higher that was capped at approximately 50% of last Friday's fall at 130.50 zone. Sterling posted the marginally fresh low at 148.65 and holding above this level for a consolidation rather than any stronger corrective action. Dollar yen is correcting current recent fresh high posted overnight. Basically, the strong bull trend remains fully in play, and the pair posted 96.70 versus the last Friday's one at 96.54. Bulls remain fully in play, and we are eyeing now for a 100 psychological barrier in the near term. Currently, it's in the corrective easing down towards 96. Dollar Swiss off recent low posted yesterday at 94.64. Reversed exactly 61.8% of last Friday's sharp rally, but overall bullish tone remains in play as the price regains ground and heads now towards a 95 psychological barrier that may open way for a fresh extension. Higher reminder, the pair reached the highest on last Friday at 95.50. Aussie dollar remains stuck under 103 barrier. That was the level that capped the upside since last Wednesday, and yesterday's brief crack of this level did not produce sustained break higher. However, the positive tone continues to focus the upside at this point as the price is currently congested between 102 and 103, and the more focus is seen towards the upside. Today's release of British manufacturing and industrial production are seen as a key levels for the British pound as it measures the change in output produced by manufacturers and in the turning of inventory. Manufacturing is a critical sector of the economy, and the strong readings are indication of economic growth. The pound's current misery continues as the sterling has shed over the cents since the beginning of February, and the UK economy remains to weaken in contrast to the US, which has posted some solid members lately, and that are signaling a possibly stronger recovery of the economy. And this has resulted in the dollar putting more pressure on the pound, and the pound, as we said, has already dipped below psychological 150. That could, at the later stage, could extend the losses down towards 142.30. That is now becoming our short-term target for the sterling. Speaking about releases, as said, the industrial manufacturing production that is due at 9:30 GMT are the key releases for today. 0.1% increase seen on both releases compared to 1.1% in the industrial production in December, and the manufacturing 1.6% in December. Already released data showing that inflation in February in Germany stayed unchanged, and according to expectations at 0.6%, while wholesale price index gained only 0.1% in February compared to 0.3% in January, and the 0.4% forecasted. That was initial trigger for euro's fresh weakness that is currently breaking below 130.00 handle. As we said, the bears remain in play as the recovery failed to catch some important levels on the upside in order to trigger stronger recovery. Now we are again under pressure on the euro. From the other release from UK due at 1500 GMT is the GDP estimate for February. We have no forecast. 0% was a previous release, and then US federal budget balance that is due at 1800 GMT, minus 220 billion is seen dip in the February compared to 2.9 billion in the month of January, and that's basically all from for today's calendar. Recall UK's house price balance for February released during the Asian session showed dip of 0.6% compared to minus 0.4% in January, and the minus 1% forecast for today, while business confidence in Australia, dipped to 1 in February compared to 3 in the month of January, and already released the last one. Indicators, Japanese consumer confidence for February improved compared to the January's 43.3, as it came at 44.3, and has beaten the forecast that was at 43.0, and that's all for the calendar. I guess we should move to the technicals and see the latest developments in the market and the expectations for the major currencies and the commodities. Euro is number one as always. Basically what we have, the situation, if we move to the 4-hour chart, I think it's better if we do it this way, then we can see that the pair is congested above the recent lows. So 129.50 is the current base, but upside is limited at 131.33. This is the last Friday's high, and as long as holding below this and the 131.61 28th of February high, not much prospect towards the upside is seen. More likely scenario is seen as a current congestion, seen as a consolidation ahead of a fresh extension lower. Back to the hourly chart, the last Friday's sharp fall from 131.33 that dipped to 129.50 zone was initially capped by 50% of the entire move, and now we are facing the fresh weakness that is heading towards initial one at 130. That's already taken out 129, approximately 80, and then we have 129.50. There was an attempt of building a double bottom pattern at this point, but a failure to bounce higher and regain more significant levels, which is 130.74, previous high of 5th of March, as well as 131, and then our barriers at 131.33.61 required to confirm. So far failed, and we're again facing a strong pressure on the single currency that might result in test of today's of the recent lows at 129.50 and possible extension lower, where we'll be looking for extension down towards 128.75. This is our initial downside target, meaning marking 50% retracement of the longer term, I would say medium term rally from July 2012 low at 120.42 to 2013 peak at 137.10. Just below this we have also the 200 days moving average that is currently standing at 128.50. So quite a strong support zone is now coming in focus. Of course, we need to see the break below 129.50 in order to confirm a negative tone dominating on lower time frames, as hourlies are now breaking into the negative territory supports the scenario and sees more focus towards the downside, with initial resistance now being at yesterday's high at 130.52, and then we have Fibonacci levels 130.65, 130.91 ahead of 131.33 and 131.61 seen as a break points that are for now out of reach for the euro's current price action. British pound remains firmly in a bear trend, as shown on the 4 and the day 4 hour and daily ADX studies. Bears are firmly in play, as the pair posted a fresh low yesterday at 148.65, with brief consolidation being limited at 149.30, still below the previous highs at 149.40 and 149.60. A series of lower lows and lower highs define the downtrend, and basically we are focusing the downside targets at 148.53, 148.65 the price the pair reached so far, just ahead of our initial target at 148.53. That is 61.8% retracement of 2009 rally from 135.01 to 170.41, and then on the downside there is no significant support until 148. 148.00, psychological support to 147.80, which is the low of March of 2012, and May 2012 low at 142.30, expected to come in the near term. Focus on the upside, as said, 149.50 zone, approximately 40.50 zone, where are the recent peaks, and also 38.2% retracement of Friday to Monday descent is seen as a near-term breakpoint. The resistance is reinforced by 55 days exponential moving average, and the break here would be seen as initial recovery signal, while we need to see the break above psychological 50%, and then last Friday's high at 150.46 in order to signal basing attempt at recent lows, and for possible stronger recovery. That is seen quite unlikely at this point, as negative structure remains on the 1 and 4 hour charts, with the dailies also being firmly bearish, even overextended conditions, yet not showing signals of reversal. That leaves room for some stronger for further extension towards the downside. From the other side, dollar yen remains firmly in bullish trend. Currently, the near-term action is corrective, posted fresh high at 96.70, as we said, and the corrective technical correction is now underway. Tested the initial support at 96.00. These are the previous lows of yesterday, and just ahead of 55 days, hourly 55 days exponential moving average. Next significant support is 95.50. This is the low of last Friday, and ideally this level should contain dips 95.50, 95.20, where is the 38.2% retracement of the latest uplink from 93 to 90. We didn't put it correctly, to 95, pardon, 96.70, 95, approximately 95.30 is the 38.2. Ideally, this should contain, in order to keep immediate bulls in play. Near-term risk will be seen on the slide below 95, 94.80, where is 50% retracement. That may signal some stronger corrective action and allow for a deeper reversal. Key support and the break points are seen at 94.80 and 94.50. These are the previous highest, break of which is going to put near-term bulls on hold in favor of some stronger corrective action. Otherwise, we might be looking for a test of psychological 100 barrier that comes in the near-term focus. We have interim resistances at 97 and the 97.77. These are the lows, the highs of July and August 2009. That will open way up towards psychological 100 level, and also at 98.39 currently is the monthly 100 days moving average. Overall bull trend is still in play despite overbought conditions, and keeps focus at the upside after the 95 barrier has been cleared. 100 level is seen next in the near term dollar yen's trading. And a quick look at dollar Swiss. Do we have technical problem? No. Okay. Hourly structure is still it's turning positive, gaining momentum after a corrective pullback of last Friday's high at 95.50, found support at 94.64. That marks approximately exactly 61.8% retracement of last Friday's strong rally, and keeps basically bulls in play. The pair dipped below 94.85, which is the previous high, but a minor break lower and quick recovery that is currently testing 95.00 sees potential for a fresh extension higher, as overall bulls remain in play. Better seen on the hourly 4-hour chart, where the pair is in the clear uptrend from 90-20 low. The 4-hour indicators are in the positive territory, slightly extended at this point, but still pointing higher. That shows room for a possible further extension higher, and the test of the next significant, we have cleared the 95 barrier, and next significant is at 96, which is 61.8% Fibonacci retracement of the entire 9970 to 9020 descent. The current congestion here is seen rather consolidative, as long as we are holding above 95, pardon, 94.25, what is 200 days moving average. The recent dips have been contained at 94.60 approximately. Any break below 200 days moving average and 94 as psychological support would delay bulls. Otherwise, focus is still seen towards the upside, and as said, the target at 96.00 seen as the next level. This is also equivalent of the high of September 2012, that was at 96.06. Crude oil posted the fresh high at 92.25 during the Asian session as a part of a broader recovery of recent lows at 89.35, 89.55 in an attempt to to create a double bottom, as a break below the 200 days moving average so far proved to be false. Quick recovery up and regain of previous support at 92.00 now brings more credibility to this rally, as near-term studies are still holding a slightly positive tone on a steady ascent from 89.55 is the low of 6th of March, with the 92.25 seen so far, and this also marks Fibonacci approximately between 23.6 and the 38 points, slightly above 23.6 of the entire down leg from 98.63 to 89.35. Still a lot of work to do. The pair, the price broke above 90 days moving average. Is currently at 91.50, though the daily indicators are still in the negative territory, all pointing higher, but still this could be described as corrective rather than any stronger recovery. In order to confirm, we need to see break above 93, 93.35, which are the previous highs. On the downside, descending hourly indicators now so far the dips found support at 91.60, which is also the 55 days exponential moving average, but as hourly indicators, hourly moving averages start to point lower. This is already shown on the 20 days one. More risk, I would say, could be still seen on the downside. All indicators are still descending, so once we see the reversal, that will be positive signal, but overall positive tone of 89.35 and 89.55 is seen supportive for the fresh recovery. Trendline support is at 91.26, and then we have another significant support at approximately 90 zone, double bottom, a break of which would revive bears. Otherwise, we still see prospect for a retest of 92.25 and possible extension up towards 93, our next upside target. And finally, the yellow metal that is still stuck within the range and the narrowing range with the 1587 stubbornly cupping the upside. This is reinforced also by 55 days moving average as shown on the 4-hour chart, and basically price action is currently entrenched within 20 on the downside and 55 days one on the upside. As long as 1587 holds, risk will remain towards the downside, as the price action has been limited here at since 1st of March 2013. So we are talking about nearly 2 weeks of congestion and directionless movements. 4-hour indicators are currently rather neutral at this point, and they show no direction, with similar situation seen slightly positive on the 1 hour, but still no clear direction. Basically, the range limits are seen now as triggers for establishing a fresh direction. Upside is 1587, downside approximately 1561, that lots of which would open initially 1554 and then critical 1520. On the upside, break above 1587 opens 1603, which is 38.2% retracement of the larger descent from 1684 to 1554, and then the recent peak has a key level 1619, peak of 26th of February, as well as 50% retracement of the previously mentioned down move. On the daily chart, quite extended conditions see potential for some stronger recovery, yet no firm signal of any action higher. Basically, we need to see the break above 1587 in order to confirm, but as the price holds above the ascending bull trend line of 1554 low, there is potential for a possible break above 1587. As said, this is seen as a trigger, with the price holding near this level, again seeing more scope towards the upside, but to repeat, a break of either side of the range will be seen as a trigger for the fresh direction of the yellow metal. That was all from my side. Please, if there is any question, you can send it now. No questions. In that case, we will conclude today's session. Thank you for being with us. Apologies for yesterday's problem. There was a sort of technical problem that couldn't be solved in that short period of time, so we had to drop the session. We are back to business today, and I expect to see you again tomorrow at our regular time at 8 o'clock GMT, 10 o'clock local Cyprus time. Until then, I wish you a nice Tuesday, and of course profitable and successful trading. Good luck.